Helaine Kang from Capital Network is with me on the line. Helaine, good afternoon.
Good afternoon, Andrew.
We're talking Judges Scientific. Just a reminder for those watching, for Helaine's full report, click on the eye in the top right-hand corner of your screen. So Helaine, Judges Scientific, they've had their interims out recently. How did the numbers stack up?
Judges Scientific reported very positive earnings for the first half this year. The company posted record high revenues, adjusted operating profit, and adjusted EPS. The top line grew to $32.7 million, up 20%, with the operating profit increasing 48% year on year. The most positive thing is the organic sales growth, which was 14% and was seen across the region, with the strongest growth coming from China, where the order intake increased a whopping 85%. As the demand recovery continued since the second half of last year, the order book has improved to over 16 weeks from 11 weeks a year ago.
So an improving order book. Of course, they recently acquired a new business, Oxford Cryosystems. Helaine, tell me a bit more about them.
Yes, in July, Judges Scientific announced the acquisition of Oxford Cryosystems. This is the company that manufactures cryogenic cooling systems used for the X-ray crystallography and other applications. This company originates from the Department of Physics at Oxford University, goes back to 1980s, and has a very extensive experience in crystallography. This is another example of Judges' long-standing core strategy, which is long-term buy and build, and by finding out the leading player in global niche market. And this new subsidiary is already profitable and cash generative, so we expect this should be immediately earnings accretive for the second half.
Well, you mentioned the second half there, Helaine. Looking ahead for the rest of 2017 a bit more broadly, how are things looking for them?
On the overall macro side, obviously during the first half of 2017, UK was the only region where both sales and order intake declined year on year, and this is clearly due to the Brexit impact. However, given most of Judges' business are international, healthy growth from other regions such as China and US should be more than enough to offset any negatives from UK. So all in all, we are not too much concerned about the Brexit impact in the near term. The management is also very confident to meet the market expectation for full year 2017 earnings. We revised up our estimates slightly and now expect the revenue growth of 16% and operating margin improvement to 14% compared to 12% last year. And one of the very key reasons for any investors to be interested in Judges should be the firm's strong dividend record. Judges increased its interim dividend by 11% to 10p. And this is another strong sign from the management to confirm that their priority is to enhance shareholders' return. So we believe circa 10% per annum dividend growth in the foreseeable future is quite realistic.
That's great, Helaine. Thank you. Don't forget, for Helaine's full report, click on the eye in the top right-hand corner of your screen.